Hey everybody. Good morning. Good morning. Good morning. Good morning. Philip, Eric, Maurizio, Svenborn. Glad to have you back. Donald, Brian. Man, Brian, that was a shocker. When I finally was going through my messages last night, I was like, holy moly. Awesome, dude. Ed, Rob, Rex, Kenneth, Francois, Merle, Sledge. Glad to have everybody. Amy, don't recognize your name, but good morning. Glad to have you on the stream. Wade, Rick, Craig, Alan. Welcome, everybody. Laura, Rosalind, glad you made it home finally and hope everything's okay. I'm still working, waiting on a reply from my friend. Sent him another message today. So we'll see. And I got Jody checking with her husband on it too, Rosalind. So Jody in the VIP chat. You met her at the event. Rongamer, Carlene, welcome, everybody. Larry, Don, Nikki. And hope everybody's having a great day. Now, remember, tomorrow, Juneteenth, an oddball, closed on Wednesday day for the market. We will see what's happening here. See what's happening. And so futures going to open like normal. Tonight, 6 p.m., normal day. They close at 1 p.m. tomorrow. Now, the wrench in the monkey works, if you will, is that the regular equities market, stocks and options, don't open tomorrow. So futures close at 1 p.m., reopen at 6. So they're closed for like 2, 3, 4, 5, 6, 5 hours. What does that mean for the rest of us? Not a lot. Not a lot. Just a regular holiday. I mean, enjoy the parades and all that, I guess. And we'll be back on it on Thursday. But I will do a crypto special tomorrow. And tonight, 30 minutes of awesome. So after the market closes, 30 minutes of awesome. I will be right here for you. I need people to show up to do it. You got to make requests. Otherwise, it'll be a boring 30 minutes of awesome if there's only, it makes it 30 minutes of not awesome if there's not enough people to do the request. So that goes live 5 p.m. Eastern. Set your alarm if you want to make a request, if you're free, if you're around. Hit the bell with the notification so you know when I go live. And if you want to chat with me, like everybody's saying, hey, good morning, click the button over here. Be a subscriber on the channel. That's how you do it. And then after that, you can chat while I'm live. If I'm no longer live, you have to leave a comment down below. And getting into it, we had some retail sales numbers out this morning. Right there. Look at that. Month over month. This is interesting. So the core, -1. Retail sales, positive 0.1. That's 0.1, not 1%, 0.1. That's odd, I guess. So the core kind of being a little soft, seeing a little negative month over month. And we're expecting a 0.2 and got a negative 0.1. So the core being a little soft. And right here, the retail sales actually getting a little pop, but not the pop they were looking for. Forecast 0.3, only got 0.1. I thought they might come in a little light. The credit card receipts numbers that came out yesterday were indicating it would be kind of in line. I mean, it's kind of the way it is here. The numbers don't matter. They're all made up, right? I mean, they bake them to push the narrative that they're trying to push. Seems to be to me. I mean, there's so many estimates and stuff. I wish they'd just report the real numbers. But the whole thing is they estimate and seasonally adjust and all this bullshit. And I don't know. I don't know how you trust any of these economic numbers at all. Quite honestly, at least not from the United States. Maybe some of these ones from like University of Michigan and consumer sentiment and stuff like that. But any of the ones that are produced by a government entity here in the United States, probably completely manufactured. I mean, let's be honest about it, right? Like, they all have an agenda. They're all beholden to an administration. Got to push a narrative. I mean, there's some good people out there, but I'm sure the numbers get mucked around. And like unemployment claims, that there's like 2 states that get it in by the reporting time, and they estimate the other 48 states results. Estimated based on what? They just like an educated wild guess or whatever. EWAG, as you've heard. So anyway, just kind of weird. I don't know, just kind of weird. The whole thing. Like, if you can't produce the numbers on the timeline, then don't produce them. I mean, don't estimate it. Then they revise it later. I mean, it's all just cooking. So using economic numbers to try to base any trades off of, it's just ridiculous. But we love to talk about it, right? Love to talk about it. And look at this. I was looking at this before I went live. Look at this. Out of all the cryptos listed on TradingView, there's only 16 right there. 16 that are up 3% or more for the week. And that's not like this week. That's like the last 7 days. Performance in the past 7 days. 16 cryptos. 3% or more. I mean, add 2% or more, you add like 2 more. 1% or more, you add like 1 more. I mean, they're completely flat. That's still not very many. So what are we having right now? We're having a big crypto rout this week. Look, that's all the cryptos down 3% or more. Add in the 2%, add in the 1%. Yeah. And when you go to year to date, though, check this out. We look at what's up year to date. That's a lot of cryptos up for the year. So this is, just keep it in mind. This is just a little pullback in crypto. We'll talk more about it here in a minute, but that's a lot of money that's flowed into crypto this year so far. Most of it in anticipation of the halving and after the Bitcoin spot ETFs got approved. We had the Ethereum spot ETFs get approved, but they didn't really get listed yet. So what's happening there? I don't know. They're trying to get approved, and it's just not. I mean, they're trying to get approved for trading. Say the words right. Trying to get approved for trading, but it's just not happening yet. So we did get ETHU hit the market. If you didn't know this happened, this is a volatility shares 2x, just kind of like BitU or BitX right here. A leveraged Ethereum ETF. So this came on the market. Now, showing this off, circle back. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, and entertaining, not a recommendation to buy or sell any financial instrument at all, or any financial things from, or anything at all from any guru like me. Don't buy stuff from me if you don't trust me, all right? Don't buy stocks, don't buy options, don't buy Forex, don't buy futures, don't buy cryptos, don't buy bonds, don't buy treasuries, don't long them, don't short them, don't trade them. If you desire personal financial advice, that's not what I do. I may never get another one of these things right again. So you need to hire and consult a financial advisor. And, sometimes I get lucky at this stuff. So that's why most of you are here, I think. And remember, interact with the video, share, like, subscribe, share with a friend, give me a thumbs up, all that stuff. Helpful. And I do take the feedback personal. So if you got feedback, let me know. I'll try to do better next time. Let's do this every day, 9:15 in the morning. Set an alarm on your phone. Come hang out. See what we're doing. Anyway, how do we make money today? That's the big question. Look at this. SPX right up in the big target. Can we go for 55? I'd love to see it. 55.30 maybe. Got an alert up there. 6,000 possibly. Way back months ago, I said it's possible. Maybe not highly probable, but it was possible. We rally all the way to 6,000. That's still in the cards. I mean, it's still only 530 points away at this point. That's so crazy to think right there. The crash is going to be epic. We actually got a green day on some of these, but still, that almost looks like the wrong color candle, doesn't it? Like with the declining move there. I mean, it looks like it should be red, but it was green. S5TH got a green one, but still just barely holding on to that one. Look, Look at that, head and shoulders. That's scary right there. Just barely holding on. Then the S5TW, stocks above the 20-day. If you've never seen these before, these are S&P 500 stocks above their whatever day moving average. This one's 20. This one right here, S5TH, is 200-day. And this one right here is the 50-day. This kind of gives us a different read, different time frames. You know, this, the 20-day, the fastest one. This one oscillates very fast, top to bottom. You may be like, how do you buy that? You don't buy this. This is an index, right? This is just a giant market oscillator telling us how many S&P 500 stocks are above or below their 20-day moving average. And then this one moves a little slower right here, but it tends to oscillate from the top to the bottom. We've recently been to the top. Recently is all relative, you know. We've been to the top more recently than we've been to the bottom, which was back here in October last year. So we've got kind of a higher probability event to go visit the bottom. All right. We did get close back here in April, but we didn't get there. Still hanging out in the bottom half, which indicates that we're seeing some weakness in the market despite the higher highs that we keep seeing. It's important to watch right here. All right. Important to check in daily and see how we're doing. If you want a live chart on this, I think it's Big Charts or something like that. But TradingView, you can pull this up. It's a daily update. That's why it has this little purple E over here. It's updated end of day. And then, of course, the 200-day, this one's like the big time frame. This one tends to take years to oscillate between the top and the bottom, or, you know, can be a year. Like this one up here was April 21, this down here, June 22. So it took more than a year, go from top to bottom. Then this down here, October 22, and we didn't actually make it to the top until March 24. So that took like 18 months to get up there. And now we've kind of peaked out so far. We could be looking at going back down again. So be careful out there. All right. Like, just know we possibly already topped on stocks above their 200-day. Now, maybe like, but the market keeps going higher. Think about it though. The number of stocks above their 200-day back here peaked out months before the S&P finally peaked and then dropped. So there was opportunity for this was like a warning. This was like, you needed to protect some profits, get out of stuff that started being softer as these stocks eroded. This is, S&P 500 stocks above their 20-day moving average, 200-day moving average. So every percent we drop is going to be like 5 stocks. They're dropping below their 200-day moving average. So right now, when we're looking at 65%, that's what, 35% times 5? That's how many S&P 500 stocks are below their 200-day. And if we erode this on down, that's more and more and more. All right, something to keep in mind. We don't typically ever go all the way to 100 or all the way to 0. Just not typical what these do. There's always some stock having a good day, always some stock having a bad day. So we don't usually ever go to 0 or to 100 on any three of these. Now, ES overnight saw the reaction to the retail sales. Pop it right up here and jump up to the current price action. We saw a little pop and then a drop. We got that retail sales right at 830. Little volatility flash, but we're hanging out on top of that 5-minute roadmap line right there. It's indicative that we can go higher from here. Indicative, not a confirmation. All right. Now, if we break below the lows, it's kind of a band in here. If we get below this 5540 area at this point, maybe come back down to 5500. If we break out above probably this, I'm willing to bet it's above that right there. I think if we get above that, we're probably going to make another extension. How much higher? Maybe 55.63 on the futures. Oh, market already open. And why not use the cash index? Well, because it just started moving. We don't have that overnight action. Look, there's no overnight action. So I jumped down to the futures. If you've never seen the futures before, ES1 exclamation point on TradingView. If you're looking at like Tasty Trade or Thinkorswim, it's going to be /ES to get that futures data. Other platforms have all sorts of other ways to pull it up. But futures trade 23 days a week. No, it's 23 days a week, 23 hours a day, 6 days a week, and present more information on the chart. I deal in technicals, and these candles tell a story. Now, I don't always get the story right, but I certainly try to figure it out. And that's what I'm all about. So if that kind of speaks to you, keep hanging out. Make sure you subscribe. We keep doing this every single day. In Q, similar story, a little bit different chart. Interesting here. We retested the high on that retail sales data right there. If we can break above that, that's a pretty clear right there. We break above that, we're hustling on up higher. If we break down below, this one's more clear than the S&P. Break down below this, probably coming back down to this prior consolidation, back down around 20,000. 20,000 on NQ. That's just crazy. So this is NASDAQ 100 E-mini futures right here. If you didn't know, like, you're like, JT, how the heck do you even trade ES and NQ? That's like SPY, SPX for ES. You know, NQ is QQQ, TQQQ, SQQQ, all the QQQ NASDAQ kind of tickers. Then Russell over here, telling a whole different story. And that's going to be the contract gap right there. I don't know why it didn't roll when the other ones rolled. There's the contract gap. That one finally gapped on the contract. And looking back up at the daily, this is no bueno. This is not a good story. Look at this. We peaked back here in May. These are small caps right here. This is not looking very good. If we break down below this, it's going to be a bigger down move in the market. I would be very cautious right now. Now, you may be like, AT, how the heck do you trade RTY? I don't even know what the heck that is. Well, that's the Russell, the RUT right here. And IWM is a common ETF to trade it. Right there. So, this roadmap line, this orange line that I keep talking about, casualty mentioning, it's available down below in the description. Click the more button, like $5. If you want the easy, I mean, that's if you want the easy button. If you're more of a DIYer, you're like $5. Whoa, I don't trust you that much. That's cool. I have it also in videos in the back catalog. You just got to do a little work. You can go DIY it. I give you the code. I give you all the information. I tell you how to use it. All of that in the videos. Just got to click my name down below. Go look at the video back catalog. It's all there. This was exciting yesterday. Look at that close. We still have a little bit more resistance up to 81-ish area. We get above that, it's pretty much game on for this. Probably going to go right here, right up in there, right around 90, 92, something like that. And yeah, that'd be nice to see finally. And then if we can actually get above this up here at 105, it's game on. We could be cruising on up here, 130, 140. That's really what I want to see right there. This is just an intermediate stop. We may see some resistance at that 105. May see some resistance at that 90 area. We'll see. We'll see. This can be really bullish. I mean, look at that move. This was a very strong move up into that February 22 high. This has been a choppy, nasty, gnarly correction ever since. I mean, think about that. It's over 2 years. We've been just correcting this, just choppy corrective. And this is kind of winding up the spring right here in this tight range. The spring can pop very easily, very easily. So this was encouraging watching that move yesterday, breaking above that downtrend of highs. Watch out. This thing can move quick. You may be like, nah, it doesn't move that quick. Oil, nice and slow. Look back here. Look back here. Look at some of these moves oil did. Look at that hustle from 94 to 130. And that only took 1, 2, 3, 4, 5, 6, 7, trading days. 7 trading days to go from 90 to 130. So oil can hustle when it wants to. And no telling what might cause that this right now. So be careful out there. You'd be like, well, that was because of whatever with Ukraine and blah, blah, blah. Be careful. Don't assume anything. Don't assume anything. And so this is the first warning. We break out about this. We're probably cruising right up here. I'm ready for it. I don't know what you. This is also setting up a potential head and shoulders. Get the little shoulder, head. May see another dip. Retest may do the classic move up here, retest the uptrend, and before we break higher, and that could lead us to the bigger move up right there. If you don't see it, like I'll draw it in here real quick, like that. Shoulder, head, could come up here, just a little, could even be up like this, and then another shoulder retest. That could lead to that bigger breakout. Like this. Look at that. Ha-ha! It would put it right there, right in the target. I'm just saying. Watch for something like that to happen. All right, moving on. Gold. Ah, come on, gold. I would love this to quit just consolidating in here, but hey, sometimes you don't get what you want. You just get what the market gives you. Trying really dang hard to break through this downtrend of highs. Really dang hard. And yeah, even this morning, look at that. Pop up, reject. Pop up, reject. I'm looking for this to break out through this level. Be able to stick it. And then we'll probably move higher. Go retest this up here. These highs. Golly, excuse me. Monster, talking back. If we can break above those highs, probably going to cruise right up here, 2370 area right there. And that's the long and the short of gold right there. If we break down below this stuff, we could extend it down to 2300, possibly the daily roadmap line, which is on down there a little ways at this point. That's support on gold could be all the way down at 2200 down here. Do I expect that? Not really, but it could happen. This seems like it's trying to finish this up. We had the 1, 2, 3, came up shy. Could get a little extension, but it's really showing some strength in gold here. I don't care what the narrative is. I don't care if China quit buying gold, whatever narrative there is. One of my members was talking about they just sold 1 million barrels of oil to China. Got paid, did the transaction in one, and then converted that to gold. So there's people using gold for transactions at this point. Bitcoin still riding that right there. Still riding. This is cautious. Like if we get the close below this, we could easily drop down in here. Easily drop down in there. On the spot prices, same thing. Maybe we just keep rolling until these two come together. That'd be kind of stupid. Stupid for the market, not stupid. Like, be ridiculous if this happens and it's out here and we all come together right over here. That's what it looks like it's about to do. I don't know. Right around July 4th? Possibly. Ethereum, that really wants to come back to that 3,200. Come on. Yeah, I give this like 80% odds right now. Coming right down there. 80% odds. That's not what I wanted to mention here. Oh, I didn't save from the other chart. So, halving event was right over here. Grab this right here. April 19th, right there. Come on. There we go. That was halving, right? Dun, dun, dun. Zoom it out because we're going to need more days. Now, the last two halving events, like 547 days, right there, 547 days has been when altcoins peak. So Bitcoin and Ethereum, take that out. And this chart right here should find a new peak somewhere over here. And it's probably going to be way up here. It'd be interesting, won't it? Maybe here. Maybe up here. 2.4, 2.5 trillion. We'll see. We'll see. It's interesting, though. Both the last two halvings, exactly 547 days between halving and the peak for altcoins. Now, this is not Bitcoin. This is not Ethereum. I'm not talking, just talking altcoins. The altcoin value peak happened. This peak right here was 547 days past the last halving. The one before that, 547 days. Kind of an interesting statistic, if you will. Dollar. We'll talk more about that tomorrow, so come back. Make sure you're subscribed. Make sure you set your alarm. Love to have you tomorrow for a crypto special on Juneteenth when the regular market is closed and dollar just churning sideways. CMG, this one's got a split coming up next week. 50 for one. It was a big popper. Now, not nearly as big as it was. It gapped up and coming back down, filling the gap pretty quickly. And watch out. Splits aren't always bullish. Splits can be bullish, but they aren't always bullish. Now, you may be like, well, dang, that should be bigger than NVIDIA, but it's not. It's not. All right, look. They only had 27 million shares right there. They have a $93 billion market cap compared to the trillions of dollars market cap in NVIDIA. All right, stock price doesn't reflect the full picture. You have to take stock price times the number of shares available. They're going to take this number right here, this 27.47 million, and multiply it by 50. So there's going to be like a lot more, and a lot more shares. But what it does, divide the price by 50. So this value right here, this number, in a stock split, whether it's a reverse split or regular split, you know, this, in the case of Chipotle, it's a regular split, 50 for one. Like every one share here is now going to become 50. So if you want to have 100 shares of Chipotle, buy 2 shares sometime this week. Next week, you'll have 100 shares. So right there, $93.1 billion, and it's going to stay $93.1 billion. This will multiply by 50, and this over here will divide by 50. At the same time, those will occur at the same time, right there, those two events, and this will stay the same. That won't change right there. All right, that's how a stock split works. Any questions? I've had lots of questions about that lately. I'm just trying to make sure everybody's clear on what a stock split does. Now, in the case of a reverse split for some of these biotechs and stuff, what you do is you divide this number by whatever the split number is. Like we commonly see 10 for 1, 20 for 1. So you divide this by that number. So you reduce the shares, you multiply the price, but reverse splits aren't bullish. So usually you see people selling it like they're like, got to get out of that. So regular splits can be mixed bag, but reverse splits, that's usually why I call it a dumpster fire, because you don't go reverse splitting your stock because everything's going good. All right. You do it because you're about to get delisted or there's problems. All right. So that's like a big red warning, dumpster fire warning button right there when we see a reverse split. You may be like, well, what kind of stuff reverse splits? This one reverse splits a lot. 1 for 5 right there. That's an ETF. I call it a declining asset because it always trends towards zero. And there's another one. 10 for 1, 5 for 1. So be careful on these declining assets. AVGO. It's rock and roll, baby. That one could be near the end of a trend. Be careful. That can very quickly come back down. It also has a stock split sitting out here, 10 for 1. Now, that's going to happen about a month from now. And you may be like, well, that can be really bullish. Well, be careful. All right. That's what I got to say. If the market decides we're done, so we're going to take this from 465 million to 4.65 billion shares out there, and we're going to divide the price by 10. So instead of 180 or $1,826, it'll be 182 as of today, which we'll see what it is next week or next month when we split. And this number over here will basically stay the same the day before and the day after split. Moving on. SMCI. Lower highs. Watch out. One of these days. That one's got to pay the piper. UCOM. All right. Finally up in the target zone. Now, watch out. I thought we'd take longer to get here, but we may pull back from this zone, retrace back to the breakout point. Broke out above these highs from all the way back here in 22 before we can push higher. ITCI, intracellular therapies. This sounds like a biotech pharma. Be careful here. Anything the FDA can get involved in, this can just make a huge gap down. We saw one of those yesterday. Be careful. Silk Road Medical, another biotech, medical pharma, med tech pharma. The FDA, like that's a wild card for me. It's political, but it's not. So be careful out there on things that the U.S. FDA is involved in. That was a nice pop. I tend to stay away from these because they're not so predictable. Four things don't follow my patterns. 1, biotech, medtech, anything the FDA is involved in. 2, China stuff, because China doesn't have to follow accounting practices like the U.S. So, surprise. Surprises aren't good, especially when the market has no way to account for them. So it's all like sentiment, and then sentiment changes drastically when surprises happen. Then low price stuff under $10, but that doesn't count cryptos or Forex. It's just stocks and equities under $10. And then leverage stuff. So those are the 4 things that don't typically follow my patterns on the regular. I mean, there's a few other things like real estate investment trusts, which that's a different game, and like SPACs and things like that. So SPACs are a different game too. That's like IPOs. I mean, it's like avoiding the IPO process, but the SPAC comes online and just sits, and then we get news and we find out what's actually happening. So that's a different game. But I mean, so maybe the list should be 6, but I don't know. 4 common things that we see all the time. MU, well, that's right up in the target. Beautiful. I don't really expect that to go above 160, but hey, we can do it. 200 above that. 200 would be the next move up here if we're going to get super stupid. And look at that chart. Be careful. It's starting to go, it's gone vertical. When they go vertical, I mean, I warn this all the time. When they go vertical, watch out. They'll do this move, then they'll consolidate, and then the party's over. It's a very common, like, go read this. Like, I mean, go Google this. Like, you can find 9 godzillion different versions of this. Psychology of a market. They all look the freaking same. And that might be the NASDAQ chart. This is why they all look the same. But that's like, if you go look at the NASDAQ in the .com bust, that's almost exactly what it did right there. So be careful. Be careful. One of these days, Elf Beauty. Tell you what, I did not get long. I might get long today. We're probably going on higher. Me and Elf Beauty. Trying not the revenge trade. That's probably why I haven't gotten into it. This one owes me money. For those who've been around, you know the story. I was exactly right, but I bought the wrong time frame on my options and watched it stop out or go to zero and then watch this thing rock and roll higher. It would have been a lot of thousands of dollars. Instead, I took a nice fat loss. So win some and lose some. Like I said, don't always get it right. LZB. Nice pop. Let's see. Need a fib line. Retrace. Right near the target. Be careful. 42 could be extension. 44 above that. This has been quite choppy on the extensions. We tend to not get a lot of continuation. So watch for book and profit there. That might be the end of that move for now. Dell. Wow. What a wicked pullback that was. That one could go again. Good. We have resistance right here. Weird. Felt like something was crawling on my face. 160 right there. Resistance. If we hold below that, probably coming down here. If we break above it, probably going up here. That's the long and the short of it right there for Dell. What do you do right here? Not a lot. Not a lot. That's not a high probability thing for me. Now, you may be like, oh, I know exactly what it's doing. Okay, cool. Glad you do. We're holding the uptrend of lows. So, slightly upward bias. We could just rock and roll right up here. But not the highest probability for me at the moment. We didn't even hit the 4 hours. So, this is a lower time frame situation. Kind of mucks up the 1 hour a little bit. Not my favorite. That's why I'm not trading it. So moving on. There's literally almost infinite choices for there's more charts than I could pull up in a day. I mean, when you go all through the equities, there's like between 5,000 and 6,000 equities that you could pull up. Just regular US equities. Then there's all the international markets that beyond my scope. There's a ton of Forex. And then you go to the crypto market, and it's just absolutely insane how many cryptos there are, because there's 2.4 million cryptos. And, I mean, you only got so much money, right? So I usually pick the best of the best charts. I mean, think about it. Why chase a bunch of crap with that many options, that many options out there to trade and potentially make money? You might as well spend your time going to find a good chart that's doing exactly what you like, instead of trying to take that square peg and pound it into the round hole and, try to beat the corners off of it. I mean, just go look for something that has a round hole or has a square hole or whatever. I mean, whichever thing you got. SBIT, short, ultra short Bitcoin. So this is leverage and Bitcoin. Golly. And ultra short. So you want to play with fire. Here you go. Here's fire. It's just like BitX. This is playing with fire too. It's also on the list. This is playing with fire. 2x leverage on Bitcoin. BITU. This is playing with fire right here. It's a leveraged way to play Bitcoin. If you're going to play Bitcoin, you instead of playing the ETFs, the spot ETFs, maybe put your money here. If you want leverage, but you don't want to play options, or you can't play options because spot ETFs don't have options yet. And then ETHU, more fire, more playing with fire right here. Look at that gap down. 2x leverage. When this thing bottoms though, like this one, I might buy this one when Ethereum hits 3,200. Like this might be what I buy. I mean, look, let's face it. If Ethereum goes from 3,200 to like 6,000, 100% gain, this will be 200% gain. That'd be pretty smoking. Pretty smoking. Anyway, jumping back up here. ASNS. So that's the dumpster fire pattern right there. Man, I tell you what. Yeah, just don't. Just don't trade that. I don't care what it's doing. MSTR. For gosh sakes, be careful. If Bitcoin and Ethereum take the dip that one's coming back to the roadmap line. It may make a higher low, but just be careful. I know some of my members are along that. Please be careful. Please, please, please be careful. I've been out since over here. ASML. I've been out since wherever it was over here. That one looks like it might pop. No, I've been out of this one since back here, wasn't it? I don't remember. Where was it? Where was it? Yeah, we caught it back here. I got out. So I've been out a while. That could have been enough retrace to pop the next one. Maybe. But we did miss, so we may see a deeper retrace. Adobe, well, it was on the droppers list, but now it's turning itself around. Starting to be a popper. Could this be the sign we're going positive? Possibly. That could have been the bottom. Possibly. What do we need here? Got the high, got the low. Gonna need a break above 569 to indicate we're going up here. Target's up here. Potential like that right there on Adobe. So I need it to fill that gap essentially. See, it left this fat gap over here. We're gonna have to see it fill that gap to get the upside. And we did leave a gap here. Won't necessarily fill that one, but that's gonna be support also. Coin. Now, teaching lesson, teaching moment. Why do I think upside gaps are more important right here? Usually you have bag holders. You got people that bought here. They got trapped. They're like, fudge, I'm not selling. I'm going to wait for that to come back. So they wait, 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 they wait. And they're like, finally, for the love of all that's holy, I am selling. I waited for all that time. I'm getting out. All right. Cool. You know, you can wait indefinitely in shares upside down. You know, this doesn't cost, I mean, other than heartache and emotional trauma, like it doesn't cost anything to sit there and hold your shares indefinitely with a cost basis up here. Now, gap ups, on the other hand, and I don't know where, I think my mouse finally just died. Awesome. That's cool. I may not be able to draw anything else. Dang. Let's see if it comes back. No. I knew I should change the mouse battery. Way to go, GT. I won't have another mouse. Mouse battery died. All right, so cool. And so when stock's dropping and people are short selling or whatever, and then you get a gap up, there's not people waiting to sell the stock. So like the gap fill is not usually as prevalent on the downside. So, you know, be careful out there. And let's see. Go to coin. I can still work the keyboard. Can't work the mouse because mouse came back alive after I unplugged it or after I pulled the battery out, and it died again. Imagine that. Anyway, so coin probably gonna come back to the roadmap line if crypto drops. I'm kind of banking on that myself, looking for that entry. FSLR. That looks like it wants to come back at least to that 240 area. If we get below that, probably back to the roadmap line down around 200. And LEN, Lennar, another home builder, back to the roadmap line. Can we bounce here? Break back above that 162 area. If so, maybe cruise on up to 179. FLUT. Looks like we're just a little shy of getting to the target zone on the downside. Still below the roadmap line, still bearish. And take a break back above that 210, 215 area where that gap down is to go higher. NEE. Almost back to the roadmap line and may take the bigger down to like 54, possibly even an extension lower to like 44. PM, Philip Morris, coming back. Oh, mouse working again. Waited long enough for the battery to chill out. We may see Philip Morris come back down here. Back test the breakout line right there. CRMT. Dropping out. America's Car Mart. May see that one decline further. And TES. 80. Connell. Be careful here. That one may come back to the roadmap line. And ZNTL. Dumpster fire, baby. Just doesn't, the only thing missing here is the reverse split. Dumpster fire potential. BitX, like I said a minute ago, this is highly dangerous. Highly dangerous on leverage right there. And that's the list for the day. Looking at my bias for the day. Let's chug it on up. Let's hit that 5,500 target. What do you say? What do you say? Watch out. Remember, market close tomorrow. Be careful out there. I will be live tonight, 5 p.m. Eastern. 30 minutes of awesome. Make sure you're subscribed. And so, MB, the reason 1448 is on there is because it's 90% of the way to the 1272. If you've ever heard me talk about the fact that if these fib lines are fuzzy zones right there, the 1448 puts a number to the bottom edge of the fuzzy zone right there, as in 90% of the way. That's why 1448 right there. I did a bunch of math on it, and it's super high probability. Super high. All right. Have a great day out there. We'll see you later. I'll be in Discord, and, the account you save may be your own, so be careful. It's not being wrong to cost you money. Staying wrong, don't stay wrong in the face of new information.